my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Now, I was away last week at the Commodities Week conference online, which is why I did not update my weekly commentary last week. So when I left this market, we'd had made a weekly key reversal up, and the market was testing up to the congestion area from August 2014 between 18,400 and 19,070. It seems nothing much has happened since. Well, that isn't strictly true, is it? Not with today. Anyway, let's take today aside for the moment and look overall. The overhead congestion is still there, having been tested a few times, but still intact. We did have some support from the recent 50% Fibonacci line at 17,890 plus the old October 2019 high at 17,815, though obviously not today. The bullish Andrews pitchfork for April to May action is now not only being tested, as it was earlier today, but the lower time, currently 18,130, has been breached, if not broken today. Now, I wasn't in love with this pitchfork, as I mentioned 2 weeks ago, so I need to adjust it. So if I need to adjust it next time, retire it, or even put a shallower bullish shift pitchfork, then I would be happily to do so. Top side, we have the potential neckline currently at 18,570 for, let's be honest, a flaky looking reverse head and shoulders formation from the beginning of May today. I'm half expecting this pattern to morph into something else by next time. Finally, below we have the flatlining medium moving average. Now this one is important. Flatlining medium moving average 17,410. I am always suspicious of flatlining moving averages. I suspect it to be stronger than the angled ones, sometimes at least. So what can we say? Well, the follow-on higher from the weekly key reversal up has been disappointing, is an understatement so far, to put it mildly. Not so the breach of the bearish bullish Andrews pitchfork low toe. That being said, we are still within two admittedly shallow bullish shift pitchforks, longer ones. The 2017-2018 one, where between the middle time currently at 16,930 and the upper time currently 24,25, and in the more recent October 2021 to March, October 2020 to March 2021 one, we're in between the lower time, currently 16,645, and the middle time, currently 18,960. Whilst these two are still in operation, the market still has a bullish incentive, even if it sometimes looks like it is missing. Now, I would just add, with such moves as we've seen today, that we're now on for a weekly key reversal. So if we close this Friday, that's only Tuesday, think about it, it's only Tuesday, we're already on for a weekly key reversal. So if we close this Friday either over 18,345 or under 17,985, then we're beyond. Right now it looks very much like a weekly key reversal down. LME 3-month zinc. Now, I wrote back in November last year how the bullish incentive was still alive. This was due, and I quote, to the shallower bullish shift pitchfork with the same move. That's early July to early October 2020. I added, and I quote, so whilst superficially the market may be topping and looking sideways to a potential move lower, the reality is that the bullish incentive is still alive, though at a less acute angle. It all depends on what the market will do with the big old 50% Fibonacci line at 2806, because there's a lot of support below and also resistance above. End of quote. Since then the market has overall moved higher, most recently using the lower time, currently 3013, as a base of support. This doesn't mean that the move up was not without incidents. As recently as today, the lower time had been pierced. However, you can see from the action of the whole of last week, with a lot of indecisive spinning tops, that the market has been very uncomfortable riding along this lower time. This has left the door slightly open for a possible key reversal down, a weekly key reversal down this week. You see, the market has already formed a higher high yesterday than last week. Today has dipped quite a way down to 29.79 indeed, towards actually making a weekly key reversal. All it would need would be a move down below 29.63 and then a close either over 30.51 or under 30.04, which to be honest wouldn't be that hard, I think. to make it happen, but you'd need that drop down first. That's why it isn't such a big ask at the moment. It all depends on what happens between now and Friday's close. Finally, I once again deal with targets X1 and X2. Please cast your mind back 6 weeks ago when I spoke thus, and I quote, "You see, there's the possible, now very possible diamond pattern formed over January to March. This pattern could see the current move up as a righteous move higher. I was ready to retire this pattern 2 weeks ago, which is now something like 7 weeks ago. I said as much at the time, but I have kept it on, as despite delay, it may give a target to look to. So, in case of this break higher being genuine, and also take into account the idea that the bullish incentive is still secure, I've placed a couple of possible targets topside. Target X1 in the 30.95 area is a preliminary target for this misshapen diamond as a continuation pattern, whilst target X2 in the 32.15 area is a full move higher from the diamond. This last one is coincident with the June 2018 high. Doesn't mean that they will happen, it just means that as we've started the move up, you'll have an idea of the size of the move available." End of quote. Well, we've already reached the first target, target X1, but target X2 seems somehow a lot farther away now. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.